Hello and welcome to Asking for a Trend. I'm Josh Lipton, and for the next half hour, we are breaking down the trends of today that'll move stocks tomorrow. There's a lot to keep track of, so we're focusing on what you need to know to get ahead of the curve. Here are some of the trends we're going to be diving into. Wall Street seeing green today. Stocks had a strong run in the face of trade war uncertainty. Nvidia helping boost the Nasdaq on news it reached a big milestone of a $4 trillion market cap. At the end of the session, all major indices ended the day up. And more tariff letters delivered by President Trump to outline what nations will have to pay as a trade partner with the United States. But what will be the long-term impact of this tactic, and what will the future of global trade look like? We're taking a deeper dive on that. And penguins may be flightless birds, but Penguin Solutions stock seems to be soaring here. We're speaking with the company's CEO to learn more about its growth and strategy. Well, President Trump moves forward in his efforts to reset America's global trade relationships. Trump unveiling more letters directed at U.S. trading partners, dictating new tariff rates. The president recently announcing a 50% tariff on Brazil. And here to discuss is Strategas Securities Director of Policy Research, Jeanette Lowe. Jeanette, it is great to see you. So let's dive into this, Jeanette. Trump obviously, listen, all this week he's firing off these tariff letters, Jeanette, right, to various countries. To be honest, Jeanette, markets have shrugged at this. I mean, we had another day today, green everywhere, Jeanette. And I've been talking to different investors and strategists on the show this week, Jeanette. And I have to say, largely, they've kind of shrugged it off, Jeanette. I think the consensus has kind of been, this is just the Trump tactic. It's the typical go-to Trump negotiating tool. It's the art of the deal. I'm just curious what you make of it. Is that what you're telling your clients?
And perhaps, thanks for having me on the show. I think what's important here is that we are now in the second half. One of the big things that happened in the first half is that we got the tax bill completed right before the July 4th holiday. And so that's now setting up for Trump to go more aggressive again on tariffs. I think part of the market pullback is that you're still seeing a delay before these tariffs come into effect, with them not coming into effect until August 1st. So market participants are looking at that and seeing that countries still have the opportunity to continue to negotiate over the next couple of weeks and potentially get those rates down. But the overall trend here is for tariffs to move higher than their current levels. I mean, one thing when we look at what happened with the tax bill, that actually has a lot of provisions in it that are good for consumers and that are good for businesses, and they will actually help to sterilize the impact of some of these tariffs. But that actually now gives Trump a cushion to continue to go forward. They delayed some of the implementation of the reciprocal tariffs until after July 9th, and that allowed for that tax bill to get done. But now that it's in place and it provides some fiscal cushion for the markets, you are now seeing the president announce more tariffs. And I think what's more important, we'll have to obviously see what happens with some of the bigger trading partners like the EU. We already had Japan getting quite a negative deal. They still have time to negotiate. But then also what happens? Do we see semiconductor tariffs announced before August 1st? Do we see these copper tariffs going into effect? You actually could see tariffs ramp up quite significantly from here, and the market may take a much more negative tone as we get closer to implementation date.
You mentioned that August 1st deadline. Trump has seemed to suggest he's not going to move that again. He wouldn't punt again. Do you believe him on that?
I think that he said yes, but not a hard yes. So I think we saw that July 9th seemed like it was a really strong deadline. Then that got moved. You did have Secretary Bessent talking recently about having Labor Day might being the more apt timeline to get a lot of these trade deals done. So I think in some cases you could see August 1st being delayed. But I think what's going to be more important, again, is kind of seeing what are some of these trade deals with our major trading partners. Do those tariffs get worse? I mean, if we're seeing a 20% tariff on the EU and 25% tariffs on Japan going to affect August 1st, that's obviously going to be much more onerous for the market. But I think we have to see if there might be some leeway. And I think that there could be. I think it's just going to depend on the case. It's not going to be a complete extension. Trump does want these tariffs to go into effect. And he does, obviously, one of his big goals is to get more manufacturing and specific industries back to the U.S.
How are you talking, Jeanette, separately to clients about what's ahead for the Fed? I think Trump has made his views on Jay Powell fairly clear at this point. We've got reports, Jeanette, you've seen them, the Journal saying he's weighing, maybe it's Kevin Hassett, maybe it's Kevin Warsh for that top job. I'm just curious how you're thinking through it.
Well, I mean, I think obviously we don't think the Fed is going to move to cut before September, and the administration is going to continue to hammer on this point. They would like interest rates to go down. They would like that partially just because of the cost that the interest cost that it costs to finance the U.S. debt. So that is something that he's going to continue to do. We're moving closer. He's got still about less than a year on his term that ends. But Trump has been doing this kind of talk about the next Fed chair for quite some time. We still think overall it's more likely that someone gets announced in January to fill the slot that's going to be opening up on the Fed at that point, and then that person can then be elevated to Fed chair as Powell's term expires. But I mean, this is going to be kind of the overall theme that we've continued to see, where Trump continues to push to try to get some movement from the Fed to lower rates, because he really does think that they've been too high for too long, and that that's hurting the economy overall.
And finally, Jeanette, I got to get your take on all things Elon Musk, because he's certainly making headlines there. He's talking, Jeanette, he's going to start this new American political party. He certainly has the means to do that, Jeanette. Do you think he's serious? And do Americans, do they want another party, Jeanette?
I think there is definitely a segment of the US population that would be open to having a change from the two-party system. It is a very difficult system to try to break. But, I think it's a little too early to tell. Obviously, he can get the funding. He has funding. That there could definitely be some people who reached out to him already about trying to set this up. But I mean, the devil's in the details and kind of actually getting that off the ground and then figuring out who your candidates would be. I mean, I think if we looked at the last election, there was a significant effort by the No Labels Party to try to get a candidate. And they found it very difficult to actually get someone to want to take that position, to take that slot, because there is always the risk that that candidate can then skew the election in one favor or another for a particular party. So that's something that they're going to have to weigh. Having a party is one thing, actually having a candidate who can run it is another.
Jeanette, great to see you as always. Thank you.
Thank you.
Stick around. Much more Ask for a Trend still to come. U.S. stocks closing higher as Nvidia jumps to a fresh all-time high. And Yahoo Finance's Allie Canal joins us now with the trading day takeaways. Allie.
That's where we're going to start today, Josh. Nvidia touching that $4 trillion market cap. So this was the first publicly traded company to do this. Of course, it was going to be Nvidia if it was going to be anyone. And we saw the stock finish just under that $4 trillion level. Microsoft right on its heels, $3.7 trillion. Even a company like Apple, which has struggled so far this year, still trading above a $3 trillion market cap. Now, it's interesting to see some of the other players within the Nasdaq 100 that have these trillion plus valuations. Even a company like Broadcom, which isn't really widely known from the everyday American, by the everyday consumer, still above $1 trillion. And I think this speaks to how we're in this era that's different from the dot-com bubble. We always talk consistently whether we're in this AI bubble, but if you look at the bulk of these companies, these are growth plays. They have real solid earnings. There's momentum there. And I think it just speaks to this moment in time that we're in, considering a lot of Wall Street strategists have been telling us that we're only in the first innings here. Yeah,
it's a remarkable milestone for Nvidia and CEO Jensen Huang. Key question for Nvidia investors, do you think those big tech companies were Jensen's big customers? Any sign there that they're slowing down their AI spend? We had analysts on the show today who covered that name. No sign to them, they said.
No sign, and I mean, we'll get that update, right, in the next few weeks, the next few months with earnings. So Nvidia one, I have my eye on, and then also the great rate cut debate rages on, and we've been talking about this all week long, but President Trump had this to say on Truth Social, calling for at least 300 basis points worth of cuts, so very aggressive here. But what's interesting is that Wall Street is starting to weigh in, and they're not necessarily disagreeing with the president. Piper Sandler, Michael Kantorowicz, he said that at this point, the average American consumer has been weighed down by the high tariffs, particularly in the housing market. And the worry here is that that could contribute to stagflation. So everything sort of boils down to housing. If you don't fix that, that's where you could potentially get into some trouble. So not to say that he's calling for the 300 basis points of cuts that Trump is calling for, but there is this argument emerging, okay, maybe we shouldn't be too late to cut, which obviously is the big debate on Wall Street. And this all comes as there's two Kevins emerging as the possible next Fed chair. This is according to the Wall Street Journal. Kevin Hassett, Kevin Warsh. We know that President Trump wants a more dovish Fed chair, and that's brought up conversations of whether or not this will be a shadow Fed chair, whether the Fed can still be looked at as truly independent. But you have to remember that there are multiple FOMC participants here, so no matter who the president picks, you're still going to want to have the bulk of those Fed officials on board with their rate cut decision. So it doesn't automatically mean that we're going to get rate cuts.
Yeah, with Warsh, it was always interesting, Allie, because I don't think of Warsh as dovish. With Hassett, which is if he did pick Hassett, I guess the market would think, okay, well, then we got cuts coming. You know, he must be aligned if he picked him. And then it would be interesting just how the markets, stock and bond markets, react to that.
And Scott Bessent, right?
Yep.
The Treasury Secretary. He's another name that's been thrown into the mix. So it really just depends on who Trump wants at that moment in time.
We shall see.
We shall see. And then finally, tariff weakness, a dip buying opportunity here. And this was a paraphrased quote from Stuart Kaiser over at Citi. And it made me start to think about the past year and really what we've seen on the retail trading side. And if you look at the market, particularly the S&P 500, since those April lows, we saw a lot of that dip buying occur around here. Retail investors really driving this upside swing, pulling those institutions along with it. We saw a little bit of a dip recently. That was after those Middle East tensions, but now we're on the up and up, surging back towards those all-time highs there. So as long as we can continue to wade through some of these tariff uncertainties, some of that volatility, we should probably see some bumpiness this summer. But strategists are saying that we still have more room to run here, and maybe earnings is that next catalyst.
Yeah, it is interesting the way Trump just fires off these tariff letters. And you know, like today, Allie, the market just
Shrugging it off. It's the taco trade.
All right, thank you, Allie. Stick around, much more Ask for a Trend. That's still to come. Penguin Solutions topping earnings estimates for the third quarter. The company also lifting its full-year earnings outlook amid AI infrastructure momentum. To discuss this and more, let's get to Penguin Solutions CEO and President Mark Adams. Mark, it is good to see you. So you report, Mark, investors clearly like what you had to say. Your stock soared nearly 11% in today's trade. Walk us through the report, Mark. What are you seeing in the business?
Yeah, we were happy with the results for our third quarter. Revenue was basically in line with where the analysts were, but we continue to drive our overall solutions framework in the business model. What does that mean? It means that we're selling our managed services and our software tools along with our systems to end markets that are valuing kind of the know-how and the capabilities we have as a deployment partner. That shows up in our gross margin, and the gross margin was solid for the quarter as well, and that led to the strong guide. I think also we highlighted on our call yesterday that the balance sheet has never been healthier. We did a refinancing where we're now net cash positive with zero net debt at this point, and really have a platform for future growth in an exciting space in this AI infrastructure game we play.
You know, Mark, we got Q2 earnings season on deck here. And as we head into that, I'm sure, Mark, there are other CEOs and CFOs who were getting together and we're at least weighing whether maybe we should be pulling guidance, just given the world of uncertainty we're living through. You didn't. How come? What kind of led to that decision?
Well, I think as we assessed at least the initial round of tariff impact on our business, which started all back in April, as we went through that assessment, remember, we're a US-based manufacturer, so we have our integration and manufacturing facilities here in the US already, primarily in the memory and compute side of our business. And so the impact overall to our business was minimal in the third quarter, and we're watching it as everyone else is. But at this point, we were able to hold guidance and feel pretty good about the business through the end of our fiscal year, which is the last Friday in August.
So you're relatively shielded there, Mark, but did you see any kind of downstream effects of those tariffs in terms of customer behavior and spend?
Yeah, we did. But we have a smaller LED business, which is under the Cree LED brand. And we have a facility in Huizhou, China, which was pretty heavily impacted originally. We're working to offset that. So we saw what that meant, not just in terms of our own chipsets and technologies on the LED side coming to market, but also products that are manufactured offshore. Even then, our business in the LED space was up slightly quarter over quarter. But again, the space we're in right now, very attractive tailwinds on the demand side. And what we do is primarily US based and US driven.
I'm curious, Mark, just given the uncertainty we are dealing with here, the tariff uncertainty included, has that impacted, Mark, how you're doing your job? Has it impacted how you're thinking about investing and spending and hiring?
I think as we think about longer term visibility and planning, given the uncertainty you're referencing, we don't really have a good handle on how future demand at our customers will be. Right now, we've seen very little of that. But to your question, that's really what I spend most of my time in relative to macro issues is how is that going to impact the global economy and our customer set. I haven't seen so much of it yet, but there's a lot going on in the market and these daily kind of communications on what's evolving on the tariff and macro front. We got to keep a pulse on that, and that's relatively new to running a company relative to the day-to-day CEO responsibilities.
When I think of your competition, Mark, I think Dell, I think HPE. What do you bring to the table that's different?
Well, our sole focus really is in custom solutions. And what I mean by that is we spent 25 years at Penguin in high performance computing was a great precursor in the know-how to deploy large high performance computing clusters along with all the integrated technologies. What are they? Cooling systems, power, storage, memory, management cluster software. And so all of this in our managed services to help them install and provide tools to make sure there's reliability and high performance. It's really a solutions set that starts with software and services, and the systems kind of follow through. And that's a different model than our competitors use.
What percentage, Mark, of your business is now AI related, and how is that different versus 12 months ago?
Well, we continue to grow more and more like that. I'd say we're kind of in the 70 to 75% range of AI. As you know, we evolved from a holding company model and rebranded the company Penguin Solutions last fall because of the momentum we have. And I think you'll see continued focus and continued shift more to AI infrastructure solutions. Even our memory business has a number of development efforts to help alleviate the bandwidth challenges memory and GPUs have. And so we're driving those investments to further enhance our AI offering.
Mark, always great to see you and have you on the show. Thank you.
Thanks for having me.
Take a look now at some trending tickers that are moving after hours, checking in on shares of Kellogg, Dollar Tree, and Costco. Shares of Kellogg surging after hours. The Wall Street Journal reporting that the Italian candy maker Ferrero is nearing a roughly $3 billion deal for Kellogg, the cereal maker of Fruit Loops and Frosted Flakes. The report also stating that a deal could be finalized in the next few days. And moving over to Dollar Tree, those shares also moving higher after hours. The discount retailer announcing a $2.5 billion share repurchase authorization. The Dollar Tree CEO is saying in a statement that the company will prioritize, quote, returning excess cash to shareholders. And Costco rising as the wholesale company reports sales for the retail month of June. Company reporting an increase of 8% year over year, just shy of a $2 billion rise. Net sales for the first 44 weeks were up around $17 billion from this time last year, another 8% increase. Well, that's a wrap on today's Ask for a Trend. Be sure to come back tomorrow at 4:30 p.m. Eastern for all of the latest market moving stories affecting your wallet. Have a great night.